You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find at www.silver-investor.com. David, we've been chatting just offline here for a second, and we're going to talk about sentiment in this report and how you use that to your advantage. So first off, you go sentiment. What does that have to do when it comes to investing in precious metals?
It may be the most important word that an investor can understand and come to deal with, both on an internal and an external basis, because sentiment, and I'll be talking about this at some length in Victoria at the conference on the 16th, is the sum total of all the emotions in the marketplace at any given time. And it can go from the extremes of fear and greed to the middle, which is indifference. And the market is always in some stage of those three, some aspect of those three stages that I just mentioned. Oftentimes a blend, sometimes difficult to tease out which one is the dominant factor. But at extremes, it's not too hard. If you have the mania phase or the greed phase, prices are going up, and a lot of times for no reason that you can see. Well, that's pretty obvious. It's greed that's taking the market there. And if it's going down for no reason, and the quality stocks you've been looking at keep dropping, well, then that's obviously a fear. And so it's important that the investor understand that that's how these markets go, that they oscillate between those extremes. And it isn't just a matter of the market, it's a matter of all the people in the market. There's a saying that when you take a position, you become part of the crowd. And you know, no matter how objective, quote unquote, you think you are or try to be, you and I are all part of the crowd if we have a position, regardless of which of the stakeholders that we are in that market.
So once you have that position, how are you supposed to use that to your advantage? Or again, when we're talking about sentiment, it must really depend on your point of view, whether you own a company, whether you work there, or if you're just the average investor.
Yeah, if you own shares in a company, you automatically become a cheerleader. And you might be very objective about it and see its flaws and its good points, but the point is, you want that stock to go up or you wouldn't have it. And so it's difficult, and it can become more and more difficult as you may perhaps buy more shares, to become really objective and maybe at some point say, gee, I was wrong about this company, or something has changed, or, you know, whatever that is, or it's underperforming. But a person has to continually do that analysis and also the self-analysis. What are my motivations? Have they changed? Am I being affected too much by the market swings? Am I paying attention to who I am emotionally? Am I comfortable with what I'm doing here? And if you're uncomfortable, it doesn't matter where the market's going. It's not going to work too well for you. You need to have a comfort level that you can deal with and that you can have a regular life with, and that you can go to sleep at night and get up refreshed the next morning with.
It's kind of like that creepy feeling you might get when you've booked a flight and you just feel, if I get on that airplane, something wrong's going to happen. So I'm going to cancel that flight, maybe leave a week later.
I'm a real believer in listening to your gut, and kind of analogous to what you just said. And you know, I believe that this is correct. I've read it several places that we have the same kind of cells in our stomach that we do in our brain. And so the old saying about listen to your gut, because it's talking to you, may not be too far off the mark. And so if you have a bad feeling about something, the thing is that, you know, whether it's driving around that corner a little too fast or like you say, taking a position in a company, you need to listen to that and figure out why you feel that way. And if you can't figure it out, maybe you shouldn't do anything until you do, rather than just going ahead no matter what. And so that's the critical thing, is to listen to yourself. There's a saying that I love in the martial arts. I spent most of my life studying it. I'm a serious student. I enjoy it as much as I did 40 years ago when I started. And one of the sayings is this: if you know yourself and your opponent, you will be victorious in 100 battles. If you know only yourself, the odds are even. If you know neither, there is great danger in 100 battles. And so that's where we are here. This is a battle. We're on a battlefield, whether you like it or not. You know, you're out there, you become one of the combatants, and you will leave the field either alive, wounded, or dead, as Dr. Elder would say. And I think approaching it that way can put a little reality into it and a little spice into your position.
You're listening to HowStreet.com radio. Our guest is David Smith, senior analyst for the Morgan Report. David, we were discussing sentiment and how that works in the market and how this time you can use sentiment to boost your potential as an investor.
Yes, if you understand yourself and the market as much as you can you don't really control it. You certainly control yourself. That's all you can control. You can't control the market. As David Morgan always says, the market's bigger than any of us, and I listen to the market to try to see what it's telling me. But if you learn to control yourself and you understand the realities of the marketplace when you're a participant, you can go in and you are empowered with this knowledge. And another saying that I really love, it's in a dangerous situation, which it always is when you have an investment, a victim focuses on their vulnerability. A survivor focuses on their ability to respond. And so by focusing on your ability to respond, and by the way, responding rather than predicting, this is what puts a lot of investors in the losers column. Respond to what prices are doing. Don't try to predict. You know, the metals are up sharply today. They were up pretty good yesterday. They were up very large amount on Friday. I don't know if this is going to continue tomorrow or for 3 more weeks or 3 more months. I think it is. I'd like it to be. But you know what? If I start predicting and saying this is where it's going to go or this is where I think it's going to go, I'm operating on a different mental framework than if I just say, look, the market's going up now. How can I respond to this? Okay? Well, if you didn't buy anything in the last 2 weeks, and I bought some last week and the week before when it was hard to do, one of my companies is up 40% in a week. 40%. And it wasn't easy. It was one of the hardest things I ever did. So in that case, I'm going to sell a little bit. I'm not going to sell my core position, but I'll sell a little bit and take a profit. And then that'll make me feel good internally that I got it right. And if it drops down a substantial amount, I'll buy it back cheaper. If it doesn't, I still have my core position. So that's the ability, that's how you respond. If you have some dogs that didn't do too well and you've been thinking, you know, either they're not going to be around or they're not going to do very well on the next leg up, maybe you should sell those into the strength. You'll get a better bid price than you would if you tried to sell a week ago. So that's the ability to respond. And maybe it's doing nothing. Maybe it's just watching and saying, you know, I'd like to have a bigger position, but I do have one. So let's watch and see where this goes. I'm going to make money. It's just a question of how much I make.
I really like that advice about respond to the actual numbers, not what you think they're going to be. And has that changed the atmosphere that you're finding at the money conventions that you've attended in the recent past?
Well, you know, it's interesting. I've been to several in the last couple of months, and I've actually spoken at a couple of them as a presenter. And it's interesting watching people, and I don't just watch, you know, the customers that come in, the people that sign up for the show, but I watch the company reps in their booths, and I listen to the other presenters, and I learn from all of them. And I kind of get a sense of what the mood is. And of course, the mood has been kind of dire lately. It's hard to be in a good mood when prices are down. And the thing which is so interesting, and I can't remember which individual said this at the last one I attended just a few days ago, but he said, you know what, if you walked into the grocery store and you saw a 10-pound bag of flour and it's normally $2.69 and it was on sale for $1.89, would you go up and say, I'm not going to buy that bag of flour until you raise it back up to $3.50? Well, of course you wouldn't. You'd buy that bag of flour. But if you're watching a great silver mining stock, an exploration or a producer or a gold stock or an ETF, and it goes down in price by 20%, you don't want to buy it. Most people won't touch it. But they'll wait until it's doubled in price, and then they just can't get enough. And so that's what people have to turn that emotion on its head. It's hard to do. Nobody gets it perfect all the time, not even the great Mr. Gold, Jim Sinclair. And David Morgan does it. No one does it, gets it all the time. But you learn, and the more you do it, the better you get at it, and the easier it becomes, and the more it lowers your tone in the market so that you're not running around, but you're more calm. That's so important.
And you'll have a chance to find out how David does it up close and in person at our Money Expo in Victoria on the 16th. David, you'll be one of the guest speakers, and I'm sure people just can't wait to maybe dig a little deeper into your mind and find out just how you come about some of your decisions.
Well, you know, it's a real journey for me. I'm a serious student, a lifelong student, and I don't get it right every time, but I can tell you honestly, I'm a lot better than I was last year and quite a bit better than I was the year before. And I hope that I'll be better, and I don't hope, I intend to be better 6 months or a year from now than I am today. And what's really keeping me going is knowing that eventually these markets, I believe, are going to end in a public mania that will be one of the biggest financial bubbles that you have ever seen. And I intend to be there to claim my just rewards during that bubble.